Hello traders, Gary Wagner here. It is 11:54 in Honolulu, 5:54 in New York on Thursday, first day of September 2022, and this is the daily report for gold and silver. Gold prices continue to drop in double-digit numbers on a daily basis. Today, gold lost $17.40, just over 1%, and is currently just above $1,700 at $1,708.80. A lot of that had to do with a strong dollar today. The dollar has been topping right around 109, but today broke through that ceiling, trading to a high of 109.98. and currently is fixed at 109.64. Silver declined by 1.27%. It has been below $18, but gave up another 23 cents per ounce today, with the September silver futures contract currently fixed at $17.65. The Federal Reserve first raised its interest rates in March of this year, the first occasion since 2018. Since that time, the financial markets have been recalibrating higher interest rates into the value of different asset classes. Specifically, gold has been moving in a downward bias and has lost hundreds of dollars per ounce as it trades on the first day of September at $1,760, and there is still 1 day left in the week. Today, gold traded to a low below $1,700 per ounce, with the low at $1,699 per ounce. Currently, it is back above that at $1,706, but we could see a further decline as the markets continue their final recalibration to the real knowledge that interest rates will probably be at least 4% by the end of this year. So the question becomes, where could gold trade to? Obviously, it looks as though it will not hold the 78% fib retracement, which takes us to multiple lows that occurred during the flash crash at 1680. While that is still about $25 from current pricing, it is a very reasonable assumption that gold could go and test that price point. Although the last time gold traded to a low of 1680 really occurred back at the end of June, and that is this weekly candlestick right here. However, we have lots of historical data, including this low here, what is labeled as the flash crash, these two lows here, and an entire series of weeks in which $1,680 acted as a key and critical point of support. It started as resistance prior to 2020, but for a multiple month period, it acted as a support level before gold rose to its all-time record high and then re-challenged that all-time record high this year. So we have multiple instances in which we have seen $1,680 per ounce act as a key and critical level of support, which is why I believe that if gold challenges and closes below $1,700 per ounce, either tomorrow or early next week, the only obvious place to look realistically for technical support comes in at $1,680 per ounce. Since June of 2021, we have seen a surge of the dollar index as the dollar gains strength against a basket of other currencies, moving from just below 90 to approximately 109. It then had some resistance. This again is a weekly chart of the dollar index, but as you can see, we have broken through this particular price point of resistance just at 109. And if we look back on a long-term chart, the last time this occurred was 20 years ago, which can only be viewed by compressing the chart to a 2-month candlestick chart. We can see that beginning at the end of 1995, the dollar index was at around 80, and climbed to roughly 120 and then descended from 120 down to about 72. So while we have seen the dollar trade at around 109 to 110, there is no time in history where 109 to 110 in the dollar index acted as a point of either support or resistance. We can simply find it on the way up to 120 and a decline from 120. Therefore, if we see continued dollar strength on a technical basis, there is certainly room for it to move higher, substantially higher, and that will be the determining factor on the lows that eventually occur in gold. We will remain flat with no active trades. We will look to see if gold can hold 1,700. If it does not, we will effectively look at $1,680 per ounce is a short-term support level where we might find a bounce, with the understanding that the dollar index on a technical basis could move substantially higher, which could take gold substantially lower. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.